This isn't going to be a month we'll forget quickly. The Iran conflict has had a disproportionately large impact on the UK. UK stocks outside the FTSE 250 are generally seen as quite domestic, and many investors, including ourselves, have probably lent into a UK recovery this year, led by maybe a slightly better housing market. So the whole housing real estate complex and generally interest rate sensitives had probably started the year quite well. With the conflict, we saw a reversal of that as people worried about rising inflation due to higher energy costs, and the most recent decision at the Bank of England not to cut rates and the 9-0 vote there probably spooked markets a bit. We don't think that rates are going to go up now, but clearly the further cuts have been delayed. And as we'll touch on later, there's lots of unknowns yet as we progress into Q2 rather. So what worked and what didn't work for us? Well, overall, more things didn't work than worked. This wasn't a great month for the strategy. And that's a bit disappointing in a period of high volatility. Historically, the strategy has been quite good. So what were some of our challenges? Well, I think because we lent into that UK domestic trade a little bit, that reversed quite nastily. So there were some pretty bad hits for us in interest rate sensitives. But if we look at the long and the short books to start with, so what were our long book winners? So we did well in BP, so energy prices, that was a good trade overall, being long AS oil super major. We did well in IG Index. So IG Index is an investment platform. A lot of people trading volatility on there. So higher volatility, higher trading, that was good. So that was another good long for us. So a couple of nice wins there, that was good. In terms of the longs that didn't work, well, clearly I've touched on it already, but things like Howdens, the kitchen maker, Barratt and Bellway, the house builders, pretty weak in the period as people were worried about the pace of UK housing recovery and weakness of the consumer. They weren't great. The other negative we had was Canal Plus. So Canal Plus had been an investment made earlier in the year, and actually we did very well at the start. It made an acquisition and generated some good upgrades, and then the latest update was disappointing. And it wasn't the month to give anyone a disappointing update, and the shares took a pretty big hit on that. So that was pretty disappointing impact for the fund. In terms of the short book, well, we did have some good give back in terms of the domestic losers. The domestic losers we were short of, so Jet2 and EasyJet, so that double UK consumer, and also oil, jet fuel cost, aviation impact, people perhaps staycationing. They were all negative for those two, so they were good shorts. Also remaining short Kingfisher, the UK building materials retailer. That was another beneficiary. So we definitely had a few things there that gave us some back, and Wetherspoons as well, and the pub companies had a pretty poor update. So a couple of things helped us there. The negatives on the short book, so wind turbine maker Vestas, that one of the themes coming out of the Iran conflict is perhaps green energy has got a bigger role to play sooner. And the other one was Equinor, the Nordic energy play, clearly like BP, but being short, that wasn't a good month to be short that one, even though it was a balancing trade. So overall, it was a pretty challenging month for us, a difficult set of circumstances, a lot of intra-month volatility, and clearly a lot of very sharp market moves, as we've come to expect on different interpretations of the US strategy. So looking forward into this month and maybe Q2 more generally, what can we expect? Well, I think we can all expect a de-escalation in the Middle East, and I think that will probably come relatively soon. And let's see, come to the end of that. So if we did a de-escalation, we need to be positioned to catch some of the upside there on people being more relaxed perhaps about certain stocks, and a bit of just the general bounce back from some of the worst hit areas of the UK market in particular. But we also need to be aware of some of the longer term impacts of this crisis. The effect on the supply chain in various oil and oil related products, I think could rumble on for quite a while. We saw that in COVID, we saw it post Ukraine, didn't we? So unexpected shortages in things that rely on transiting through the Straits of Hormuz, and also just higher energy cost impacts for companies. So we're going to have to get used to that, and I think that'll dribble out more slowly. So shortage crises are probably something we're going to see a bit more of in the next 6 weeks or so. I think beyond that, we may reasonably expect to see perhaps some of the narrative that was supporting the UK equities at the start of the year come back. But just bear in mind that in May we have got the UK local elections, which might change the political landscape a little bit like the US midterms. That's something that the market will be thinking about. So a disappointing month, but we're pretty keen to bounce back this quarter. We'd like to see a de-escalation in the Middle East. I think that would probably give us a better chance of recovering some of the recent losses more quickly. Thank you very much for your support again this month, and I look forward to updating you in about 4 weeks' time.